Hello, traders. Sorry about the delay in getting started here today. It's 8:05 a.m. Chicago time on Wednesday, the last Wednesday of 2020. This is episode number 1908. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So, how's the week going so far? Hopefully, everything's going well. Let's take a look at the convergent trading summary sheet that is showing us that we've recovered somewhat from yesterday's drop in the U.S. markets. The German and European Eurozone markets, the Eurostock 50 and the DAX, are still off this morning. But really, there's a mild allocation to risk this morning as flows come back into the U.S. indices out of the treasuries again. The Bund is unchanged, and you can see the British continues to gain as the year wears on or the end of the year comes along. Again, mild risk on this morning, and that's what we're heading into. Today, we're looking for pending home sales at 10 o'clock, crude oil inventories at 10:30, and then the China NBS manufacturing PMI key figure at 8 p.m. Eastern. The overnight session shows a little over 101,000 contracts traded, which is quite light, given that the mode is 296,000. 21.75 points of range, up to 52 points is considered normal. The overnight condition is balanced. We did rally and then sat sideways for quite some time. The European session didn't really accomplish very much. Anyway, that's where we stand this morning. Let's hop right in and get into our review segment. Yesterday, wasn't really expecting all that much, expected the same. The move would happen overnight and then we would sit sideways. There were some indications of weakness on the buy side, which turned up. The first thing expected yesterday was responsive selling since the overnight inventory was 100% long. Expected a sell-off right off the open, which we got, but that sell-off did not quit. It ended up filling the gap and pushing into the prior day's range and back into balance below. So my expectations shown here were not at all met. The market did not breach that high and ended up actually pushing the low. Here's what actually happened yesterday. We opened up in an open auction out of range, and then we had the sell-off come in, and it was quite the impulse, 16 and a quarter points down, right back into the prior day's range and balance. And then from there, we just simply rested right at the Monday point of control and value area. That continued throughout the session. We tested mid a couple times. We had a real test here. Unfortunately, completely misread this test. I saw this as a market that put in the IB low, put in a higher low, and was expected to squeeze back out above the prior day's range. The prior day's high is right there. It says RTH prior high. At 32.25, I expected it to push out of the prior day's range, so I effected a warning to shorts. What it did is it pushed right into the mid and sold off, broke the IB stat. We had already taken out the overnight stat, which was right there. Taken out the overnight stat, broke the IB stat, and just hung out below the IB for the rest of the session. We broke the prior session low. Again, remember, last week we had broken through the one-time framing up on the weekly, and then we re-engaged one-time framing up on the daily, which was a little bit of a kind of a disjointed effort there. and it looked like we were resuming one-time framing up. And yesterday breached the low, which ends the one-time framing up. The market's relatively neutral at new all-time highs currently. Look at this profile. How ugly and nondescript is this profile here? This is Bart Simpson. Let's put some eyelashes on him here. This is Bart. We'll call this the Bart Simpson profile. Um, but it's really a market that is indecisive and is not able to hold on very well. The buyer's still dominant. Clearly, the odds favor buyers still, and we are trading back into the 29 area, the 37.29 area up in here. This is where we are currently. So we are in the middle of this chunky balance right there to there. We're in this awesome balance zone. The delta was negative, followed price yesterday. I'm going to tell you that it's hard to read into this. It's hard to read into this currently. The fact is, we still have a big gap zone below us that we went into by a few ticks yesterday. We still have a large gap zone. It is quite bullish still, although buyers are really having a hard time maintaining prices. We knew that there was going to be a fair amount of resistance up in the 37.50 area, and it seems to have gotten ahead of itself a little bit with the news of a $2,000 stimulus per person stimulus vote, which has, as one would expect, hit the desk of the Senate Majority Leader Mitch McConnell and has hit a dead stop as it was pushed forward by the Democrats and voted in by the House. So that's on hold, and currently no movement on that. The market responded by selling off a little bit yesterday. Stimulus is stimulus. The market loves stimulus. It means more sales, more consumption, more earnings, and it's the kind of market we live in since 9/11, basically, where the market's really very, very dependent on handouts from the government stimulating or helping with interest rates and things like that. So that's where we stand today. Looking at the overnight session, the overnight, as soon as we reopen, we put in a higher low and we've walked ourselves back towards the middle of yesterday's range. There's the mid of the range right there. We have our point of control right on top of it, and we have done very little in the European session. We walked back up and just went sideways for the session. The point of control at 37.32 with 110,000 contracts, relatively light. It is relatively quiet, even though inventory is positive. Remember, the inventory is 61% long this morning. Coming into this morning, the delta, as you can see here, is negative. This is likely to be a choppy open. Remember, we're opening inside of Monday's range, inside of yesterday's value, if there is such a thing. We're opening right in the middle of that. We're expecting a relatively choppy morning. Again, the overnight session is relatively balanced. So that's where we stand this morning. It's anybody's call, I think, as to which direction this is likely to go on the open. I hope you can hear me loud and clear. Let's take a quick check of our big picture. We want to at least keep an eye on the daily, right? We want to keep an eye on what the market has accomplished overall. And if you look at the daily and the profile behind it, so this box here represents the weekly. We're 2 days in. And you can see that we are dead on top of the composite point of control in this region at 37.2750. We're trading at 37.28. We are likely to see a relatively choppy market here. There was a swift and clear rejection of higher prices yesterday towards the 37.50. It is more likely, given the fracture that we see in the way buyers are holding on to these prices, we're seeing some weakness there. It is more likely to fall and fill in this void right here between, which is now 14 and a half with 16, 37.16. Fill in the void down to 02. This is the key trade remaining for this year, really, unless news comes out. This is what's expected. I'm expecting it to dilly-dally here, attempt higher, and then fall back in and at least hit the gap mid on the way down. It is really struggling to hold these higher prices. Again, I'm seeing the long or the buy side kind of fracture a little bit this morning. A quick announcement. I will not be working tomorrow. I'm taking the day off. There will not be a Trader Bite. I know these exchanges have become really aggressive about staying open. Even a New York Stock Exchange, which had like a lot of days off before, is now trading on the eves of New Year and Thanksgiving and Christmas and so on. But you know what? I'm not going to be here tomorrow, so there will be no Trader Bite, and I want to just take a moment to wish everyone and just a fantastic, fantastic 2021. Hopefully, much better than 2020 for you and yours. The key emphasis on next year, as we discussed, is to trade right. There's a big push that we're doing, especially through Convergent Trading, to the Trade Right initiative, and hopefully you'll finally put it all together in 2021, and the market provides opportunities. But most of all, I wish you a safe and healthy year with plenty of prosperity. So I just want to make sure you knew that tomorrow there will not be a Trader Bite. I will not be online tomorrow. So with that being said, let's take a look at what's expected for today. So what do we have here? The primary scenario is the one that I drew. Again, overnight inventory is actually still slightly on the long side. On the long side, the expectations for an open auction that makes an attempt higher, I expect that attempt to fail. I'm looking for an impulse down this morning, consolidate near yesterday's lower distribution. I'm looking for it to challenge, to start to challenge the gap zone. The gap mid is 37.0550, and that would be the key target right down here. The extended target is 02 and 0550. These are the key areas that I'm looking for the market to come down to. If it does extend, it may extend down into the 02. That would be scenario 1. I'm looking for some of these longs to balance out and close the books for the year. So I'm looking for a sell-off. The secondary is an open auction that makes an attempt down, pushes towards the 37.19 or so, consolidates, pokes a little bit, impulses up, brings us back into the overnight point of control, into the composite point of control, and squeezes the overnight high at 38 and starts to work itself back into the 37.40 area before it rests. And then the last day of the year, who knows what it brings. If we close above today, we are likely to test and breach 37.50 tomorrow. If not, then we are likely to hold steady and come back into 3,700 and close out the year where we stand. So that's That's what I'm looking for today. I'm looking for balance at the open and a strong attempt lower. If I see that the rotations are extending to the downside and I see that there's volume that follows through, then I'm going to be looking to hammer on the short side. And my targets become the 16 from 2 days ago. Yesterday, put in a low at 14.5, but I'm looking for 16. I'm looking for it to push through to the 0550, and if we're lucky, it'll get to 02 on the extended. Looking for a short in the 37.20, 37.25 area as the primary scenario. That's the big trade of the day. Good luck today. Happy New Year. Make sure you wrap up well. Make sure that your risk is under control. There's a lot going on next year. I'm working on a lot of different things. There are several webinars. There's a webinar that actually takes place next Tuesday with Dr. Steenbarger and FIO that is open to the public. I believe it's titled Everything You Wanted to Know About Trading. There's a video that's coming out with Anthony Crudele next Tuesday, the 5th. There are several events going on. There's the Trade Right Initiative. There's stuff coming out of EdgeClear. The EdgeWatch app is out. We're looking at several key trader-centric, trader-helping pieces coming out of EdgeClear as well. January is going to be an insane month, so I'm going to enjoy the day off tomorrow and for New Year. See some family, and I'll be back fresh on Monday morning and to start out the new year strong. Remember to wrap up your year well, know where you stand statistically, know what your goals are for next year. Good luck, and I'll catch you on Monday. Happy New Year all. Take care.